What's up, you guys? It's your boy Jay, the Jay the Teenage Investor, and I'm back with another video. Today, I'm going to be talking to you guys about a new book I just started reading. It's called Investing for Dummies by Eric Thompson. This is a great book, especially if you want to start learning about the stock market and investing, and I recommend for everyone to go check out this book. Now, onto my main points. So, in the beginning of the book, they were talking about investing in different things. So, they were talking about a lot of people they know that are successful invest in different things. For example, they'll invest in small businesses. They'll invest in real estate of a company. They'll invest in funds, stocks, etc. They'll have a whole stock basket. They'll invest in all these different things in order to become successful. Because if you invest in different things, you're more likely to become successful because you have different options on what it's gonna take to succeed. When you invest in these different things, you're going to learn what works best. So you can limit that to 2 or 3 things you want to invest in, or 1 thing you want to invest in. I recommend when you're starting to invest, you invest in 2 or 3 different types of stocks or bonds, and see how that works for you. And my another point is, when you start investing in stocks, it's not always going to work out right away. So, for example, investors like Warren Buffett and people like him, they did not start off by making $1 billion or $1 million right away. It took them time to become successful. It took them time for their stocks to become what they are today. It takes time to become a successful investor and a successful human being. Don't think because you start investing and it's not working out within the first couple weeks or couple months that you're not going to become successful. Take your time when it comes to investing, and you will get the results that you want to see. And yeah, guys, those are my main points from what I read from Investing for Dummies. Check out this book. Like and subscribe to Jay the Teenage Investor. Thanks for watching this video. Peace out. What's up, you guys? It's your boy Jalen, and I'm back with another video. Today, I'll be continuing the discussion on Investing for Dummies by Eric Thompson. This is a great book, and I recommend for everyone to check it out. This will be part 2 of chapter 1. Now, onto my main points from what I learned from this chapter. In this chapter, I'll be talking about lending investments and saving your money. So what lending investments is when you lend your money to an organization or a bank. So for example, like most people, you probably have your money in a local bank. When you put your money in this bank, it's called lending investment. You're lending your money to a place to help invest it. When you lend your money to a bank, you're expecting them in return to give you a high interest rate or giving them an interest rate, which will sometimes happen in maybe 6 months, a year, 10 years, or maybe won't happen. People oftentimes put too much money into lending investments. For example, in Microsoft, if you invest and buy a bond in Microsoft and invest a lot of money in there, in 10 years, you will not see like an increase in your bond because you invested too much of your lending investment into that company. People a lot of times put too much money into lending investments and put too much money into the bank, put too much money into companies, and they're not getting the results they need. People think that lending investments is a safer option, but in reality, it isn't really, because it's gonna take you too much time to earn the money you want in doing lending investments. Lending investments is an alright option, but when you're starting out investing, I recommend not using lending investments. My second point is save your money before you invest. Let's say you have like $50 and you're just starting out with a new job and you want to start investing. Save your money. You don't want to just have $50 and then spend that all on one stock, because you will be broke. If that stock doesn't do well, you will be totally broke. If you want to buy stock of only $50, buy $5 stocks, buy $1 stocks. My point in saying this is you need to save your money. You don't want to just spend all your money on stocks or bonds or mutual funds or whatever you spend your money on right away. You want to save that money and make sure you're saving it the right amount so you can start buying the stocks. If you have $50, wait until you have $200 to start effectively buying stocks. Save your money so you'll have the right amount to start buying a sufficient amount of stocks. And yeah, guys, those are my main points from part 2 of chapter 1. Thanks for watching this video. Like and subscribe if you're enjoying this content. Peace out.